Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, September the 25th, the year's 2020. Let's talk trading. It's time for the weekly wrap up. Just so you know, these videos are for educational purposes only. Your results may differ from mine. So, on the weekly wrap up, we'll go through the charts and see what has gone on this week. Well, you can see there's still about what 5.5, almost 5.5 hours left in the day, but two pairs did not fill the weekly gap. The pound dollar has taken a big tumble, 221 pips off the weekly open. You can see it's bounced out of the weekly rat zone. It's up 25 pips, or now 24 above that low. Looking at the opening range for the week, first trading day of the week, put in highs and lows. And then you can see here, taking the trade out of that zone produced a profit. Simple horizontal line trades. In fact, an old trading buddy from about 10 or 12 years ago, shout out to Ray, contacted me. He might be getting back into the trading game. And he was telling me about technicals, and he's going to use a couple. And I told him, I said, you know what? I don't use technical indicators anymore. I just use horizontal lines. Daily, weekly, monthly, hourly, opens, highs and lows, and just trade, when price crosses one of those lines. And, using the statistics in my favor is definitely proven to be profitable. Here we have the yearly open. We're 549 pips below it. So here was a simple horizontal line trade. If somebody stuck with it, well, you see how many pips you're up. But, on a daily basis, I'm not looking for these big runs. They're nice when they happen, but, I'm just looking to pick off a few pips here and there and trading heavy and, making it that way. I mean, you can make you could trade $1 a pip, make $100 when it moves 100 pips, or you could trade $100 a pip, make $100 when it moves 1 pip, or somewhere in between. You have to decide what you're comfortable with, what makes sense for your account. You can see we're 6 pips off, now 7 pips off that daily low. Another horizontal line trade is just the inside bars. We had a weekly inside bar last week, and there was definitely opportunities to take trades out of this on 1, 2, 3, 4 days this week, each one paying off. The range, still another day over 100 for the pound dollar. You can see it broke out of the high, and then it looks like it barely broke out of the low. The pivot point was within the buy zone, so no bias. So taking the trade here early in the, let's see, that's the Asian session or New Zealand, Australian session. You can see here that paid off. Then coming back into London, taking a short, paid off here. This buy zone trade you would have wound up taking a loss because it went into it but never left it. But that's trading. But you see here, if you would have taken that loss, you would have made up for it with that short the next trade. Rats, green rats. I don't know if you're going to feast today or not. You already had the one opportunity to get some cheese, and then a little bit more cheese here, not much. But we've only got, what did I say, about almost 5 hours and 15 minutes left in the day. Not even, because I think my broker closes at 21 on Friday, so not much time here for a green rat reversal. But you can see we're in the green rat zone, and we're also in the smart green rat zone. pivot. Once again, we already took the pivot out on the weekly. It was taken out earlier, and that was another simple trade. That's not a horizontal line trade per se. That's I guess I'd call it a price travel trade. It's going, chances are it'll go from this price to that price. So going from the open to the pivot point usually works out. You can see we only had 3 misses so far this month, but even when it misses, like in this case, that was a missed pivot. If you had gone from the open, there was pips to be made. You don't give them back. In and out of the wick zone, another horizontal line trade. The upper wick zone from yesterday, price started inside, popped out, came out the other side, back in, out this side, into the lower wick zone, and back out, into the upper wick zone, and back down and into the lower wick zone. So trading between the wick zones and trading out of the wick zones. Once again, wick zone trade, you want to trade out of the wick zone. You don't necessarily trade into it here. Some people do, but the wick zone is set up because once price gets in it, it's usually going to leave it. Price doesn't like to stay in the wick zone. It usually leaves it. Last time, maybe I have to put up the calculations again, but it's about 77% of the time on the pound dollar. But I probably should run those stats again just to let everybody know. Looking at the ranges, the smart range gauges, you can see here it broke out of the previous day's low. It looked like it was about maybe 2, maybe 3 pip break there. On the upside, it was a little bit more. And so far for the day, 118 pips, 53 percentile. So yesterday was kind of compressed day at only 90 pips, 22 percentile, one of the day before. So we had a couple of compressed days in a row. We flip over to the daily chart, you can see those ranges weren't that big. So we're starting what I would call a box again. So right here, we kind of had a box, then it fell through. You can see here, there was kind of a box forming right in this area, and it broke out, and it kind of formed another box, broke out, and then it just fell back down. And you can see right here on one of my trading screens, you can see how price came off of that 3 ball, went to the north. This is on M5. And this is set up using basically the high and the low of the previous M5 candle. Sometimes you can take those breakouts. And on the simple price action screen with the sweet spots gold indicator, once again, just trading with the H1 candle color, we know H1 is usually going to be greater than 10 pips on the frequency distribution during the hours that we trade. Now, there's a trader out there posted something on one of the video comments. He was saying he wrote an EA for the wall mall method and how it lost all the money, but he didn't do it exactly right. He said if it went to +3, then he moved the stop loss to -5. But the way wall mall does it is if it goes to +3, the stop loss is moved to -3. So right there was one big difference. And the other thing is, the trader didn't say whether or not the EA only traded during the hours that pay off, because right here, don't trade during these hours. We trade during these hours where we get the huge range, the bigger ranges. So, and you can run those EAs all you want, but there's other parameters such as do you stop after you make 10 pips a day? Do you stop after 20 pips, or do you just keep going and going and going? Do you keep going and If you have 3 losses in a row, do you keep going? I mean, do you have a set TP? For example, if you're up 2 pips, do you take it every time? There's so many parameters that we do on the fly because one time we might be up 2 pips and we wait. The next time we might be up 2 pips and we take it because price was struggling. And this is something that you see live as opposed to just running an EA and saying, well, if you would have taken that trade, it would have been a loss. It's like, well, not necessarily, because maybe there was 2 pips to be had. And maybe that's all I wanted. Maybe I was up 9 pips. Now I'm up 2 pips. If I've got a goal of 10, it's like if I take it, now I have 11. So do I take it, yes or no? Well, if you're trading for a living and that's what pays your electric bill and your mortgage, and puts gas in the car, yeah, you're going to take those 2 pips. You're going to be done because, this is for real. This is your bread and butter. But, in an EA doing those type of tests, it's wrong. And that's why I don't like to do those types of EAs for back testing systems. Now, did that entry give me the opportunity to take profit before it hit a stop loss? That's all I need to know. Because even if it only gave me 1 pip, well, that's 1 pip. And as I say, if you ever trade $100 a pip, you might be satisfied taking a 1 pip profit. So that, I think that's my reply to the EA person. Now there was another person that was saying something about when I was talking about the flip flops, saying that statistically it's about 50%. Well, yes, that is true. The next trade could be or the next candle could be red or could be green, but in the case of the buzzard reversal, look what's happened here. We had 1, 2, 3. And what did I say? After 3 in a row, you look for the next candle, a buzzard reversal. So what happened? Price came down, broke out, and came back up through that H1 wick zone and turned green. Okay, what do we have going on right now? 1, 2, 3 in a row. Okay. It once again it came down, but what's happening? It's going back up. We'll know in about 6 minutes, except I've only got about 2 minutes left in the video. So you'll have to take a look and see if this candle became green. Maybe it does, maybe it doesn't. It's irrelevant, but the point is it's something that you look for, and in this case it paid off, and who knows, it may or may not pay off this time. So if this candle closes red, then you'll have 4 in a row, and once again it's time to look for a buzzard reversal. I mean, here's another one. 1, 2, 3 in a row, it turned red. Here's another one. 1, 2, 3 in a row, it turned red. That was something I when I first saw it, it was just by observation. That's when I started running frequency distributions. And it showed that, after 3 or 4, there's a chance for a reversal. And even if this candle say closed red, maybe it went up and came back down, there was a chance to take profit. And that's all trading is. You just want an opportunity chance to take profit. Every time you enter a trade, that's what you are quote unquote hoping for, even though hope isn't a trading plan. Betting, gambling on, that the market smiles upon you and gives you that one opportunity to take profit. And then you have to take it before the market takes it back. So, fellow traders, that's the weekly wrap up. I really hope you had a profitable week trading. I hope you have a fun, safe weekend. And when you come back and sit down in front of your trading platform next week, I just want you to remember one thing. It's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new to the channel, please click subscribe, click like, and then share the video on all the trading forums that you frequent. This is TheRumpledOne, over and out.